Shares of Winnebago rising more than 100% in 2019 on the strength of strong sales of RV towables, just like the one we're standing in right now. The company also reporting record profit in fiscal year 2019, and Winnebago holding its investor day here in New York City, right outside of Central Park, where it's displaying towables like this one that saw sales rise by 6% last quarter, and also its iconic motorhomes that saw sales decline by 12% last quarter. And right now I'm joined by Winnebago CEO Michael Happe. Mr. Happe, thanks for joining us. Let's get right into this one. What do you think your stock success in 2019 says about investor confidence in your company and consumer-facing stocks?
Yeah, I think specific to our company, over the last several years, we've been in the midst of a strategic and a financial transformation. We're both strengthening our core RV business, but we're diversifying into an outdoor lifestyle portfolio. And financially, we've been performing consistently, delivering results. We've tripled our profit over the last 3 years. We've tripled our RV market share. So I believe investors believe both in the long-term view of our future, but they also see us delivering in the short term. From a consumer discretionary standpoint, we still believe the American consumer is strong. We are seeing good attendance and retail vitality at a lot of our retail shows, both on the RV, but also the marine space. So consumers are continuing to invest in experiences with their families and friends in the outdoors.
Great year for you overall, but over the last 2 months, your stock and also your chief rival Thor in the RV space, both of you have far outperformed the broader market. What do you attribute that to, and do you think that kind of growth can continue for the rest of this year and maybe even extend into 2020?
Yeah, I think we're both two different companies with different playbooks, but we're obviously both taking advantage of that secular consumer desire to be outdoors and again, experience and create memories. So from a Winnebago standpoint, we see 2019 and 2020 really as a great opportunity for us to continue to outperform the market. We believe that the RV and the marine market will be stable here over the course of the next probably 6 to 18 months, and we believe at our company that we'll continue to outperform in each of those markets.
Well, speaking of investors, one of our traders is a Winnebago investor. We're going to toss things over to Jim with a question for you.
Hi, Mr. Happe. Thanks for taking the question. And even though they call me a trader, I'm a long-term investor, so I've been with your company for a long time now. I'm loving seeing it return to its peak from 2 years ago, and obviously one heck of a 2019. But from here's my question. How do you think we get more turns on the multiple? We're looking at basically 11 times forward earnings, a PEG ratio well below 1. What are you thinking you can do to get that multiple closer to 14?
Yeah, I think the key to that is just to continue to outperform our peers and the competition in the industries we compete in. We're less worried about the size of company that we have. We're more worried about, obviously, market share. We're worried about superior profitability on the bottom line as it compares to our competitors. So I think if we continue to execute our playbook and we outperform the industries, again, that we compete in, I believe we'll be rewarded, by the financial markets and our investors with a fair price for our company.
And Mr. Happe, over the past 4 years, you've returned $69 million in buybacks and dividends to your shareholders. After 2 big acquisitions over the last 18 months, how does that strategy change or evolve?
Yeah, you're referencing we've been very active on the acquisition side. We invested in a Grand Design RV several years ago, Chris Craft in the marine business, and here just recently we announced the acquisition of Newmar, which we'll close on very shortly. So as a cyclical company, we need to be very careful about our balance sheet. We're very pleased with the ability to, in the past, have obviously offered a consistent dividend and to buy back shares appropriately. But here over the course of the next year, we'll keep the dividend consistent, but we'll make sure that the balance sheet is healthy by paying down some debt, ensuring a path to liquidity should the markets change, and continuing to very selectively invest in growth. So it'll be a very balanced capital allocation strategy, but very focused on making sure that we're especially financially healthy from a debt standpoint in the next year.
All right, Winnebago shares up more than 100% in 2019. Mr. Happe, thanks for joining us.
Good to see you. Yeah.
Scott, back over to you.
All right, Frank, we appreciate it.